Welcome to tonight's episode of Let's Talk Business, Hailsham Chambers podcast. Tonight I am sat here with Richard Martin from New Era Mortgages, and tonight we're going to learn a little bit about Richard, New Era Mortgages, a bit of his journey along the way, some highlights, some lowlights. So everybody meet Richard. Richard, we've met several times, haven't we?
We have a number of times now, Sam. So hello, thank you very much. I'm very grateful for the opportunity of coming, speaking to you,
thank you for
and this
coming.
audience.
Yes. Hopefully someone does tune in and watch us both. That'd be nice, won't it?
I'll make them, Sam.
Yes. Yeah.
I've got a list of people to ring up later.
So, New Era Mortgages. Tell me a little bit about New Era Mortgages.
Well, New Era Mortgages, Leslie, my co-director, and I set up New Era Mortgages about, a year and a half, a little over a year and a half ago. And we did that. We'd been working with another firm, and I was the advisor. Leslie had a very limited amount she was able to support me with. They tied it down very much on what Leslie was able to do, and we weren't able to do any marketing worth a light.
Okay.
Although we kept pushing for it. So in the end, we had an agreed parting of the ways. We decided we wanted our own business so that we could do our own marketing, have control over that, and just generate a little bit more work and also become better known for what we do, because we've both been in the industry a long time.
So your co-director Leslie, who's not here sadly,
No.
how did you form that relationship? Is this someone you've just worked alongside for years, or?
I've worked alongside her since I encouraged her to come and join PFS, actually, when we were in Hailsham. And she came to join PFS as an advisor. She's been an advisor in the past. She's worked for lenders in the past. She's worked for mortgage packages in the past. She's got a lot of experience. And then after that, she decided she didn't want to be an advisor anymore, but she was okay supporting me with my work and being an administrator. So she did that when we were with Touchstone, but it didn't work very well because she was so restricted in what she was able to do. So now it's great. She's got all the experience, very different experiences to me in some ways, but a lot of experience. She's very good at being involved with the business. She's very good at keeping me reined in a little bit sometimes when that's necessary. She's a great administrator. So that's when I met Leslie and we decided we wanted to do this together.
Because I dare say the majority of people probably don't realise the administration that goes on behind the scenes when it comes to mortgages, do they? No. You are a very heavily regulated industry. I've got several friends that are in a similar profession to yourself, and I know particularly since the last downturn in 2008, a lot changed when it came to lending.
Yes.
And you need that back of house in order, don't you?
It just makes life a lot easier because regulation has only got tighter during that time, which means it's not that we weren't doing it correctly, but it meant you really have to dot I's and cross T's a lot with stuff now. So there is quite a lot of work to do on a case, a lot that people just don't see. So yeah, it's not, there's still the perception, I think, that with mortgages anyway, that I just go back to my office, use my keyboard for 10 minutes, find the mortgage, bang, bang, off we go.
Please sign here.
Yeah, it really isn't quite like that. So, no, there is quite a lot of work involved. But with the introduction of the technology we have now, that helps a lot. And I can see the industry changing a lot more going forward as AI becomes, that's changing all the time.
I think
and that's
we're already implementing it in several areas of our
Yeah.
business. It's becoming the norm very fast.
I think it's going to change with that. My industry is going to change, and I think it's going to be brokers that really embrace it properly. It's going to be fantastic. For brokers that don't, they're the ones, people say they're going to get left behind. No, you're going to get left behind if you don't embrace it. If you embrace it, it's never going to take the place of the relationship between me and a client and the face-to-face, or even if it's on a Teams meeting. It's never going to take that away. There's going to be a few people who just want to do the electronic thing, and that's fine. They're not really our clients.
No. It's a tool of making you much more productive, isn't it?
If you do it
It's
right.
honing in on your skill set,
Yeah. Yeah.
you being able to carry out what only you, not a computer, can do,
Yeah.
and spending less time in the back of house, as it were.
Exactly. A lot of people still, and I think going forward, awful lot of people still want to deal with a real person that ideally they can see at some point, even if it's on Zoom or a Teams meeting, because not all of our work is local. So we get work that comes in, particularly from accountancy firms and an IFA firm, very much an IFA firm, which can be anywhere.
But of course, when you're, we're within the same industry ourselves, Richard.
Yeah.
You're dealing with people at often what is their most stressful time of their life.
Yeah.
When it comes to property, it could be divorce. They're not only having to sell their house to borrow money, they're also fighting a divorce and there's 2 children in tow. People are at a very vulnerable and sensitive time of their life. Having that someone on tap that knows their industry inside out, I think is very important to people.
You're right. They want to feel they're dealing with someone who knows what they're doing.
Yes.
They want to feel they're dealing with someone who has their best interests at heart, and they want to feel you're on side with them.
They can trust you.
They can trust me, and they want to feel that they're getting a little bit of hand-holding sometimes. And vulnerability, you just mentioned, that is a really important thing now in financial services. It's very important for me to identify potentially vulnerable clients and comment on that. And some clients don't think they're vulnerable, but it's down to me to decide if there's an element of vulnerability, comment on that, make sure it's recorded, and deal with people appropriately. Sometimes it's about their favoured way of communicating. Some people are not that bothered about phone calls. Some people really want face-to-face. Some people don't want face-to-face.
Adapting your service to their needs.
Yeah.
So, on the back of that statement, vulnerability, when you come along to our chamber meetings, you're often not the only mortgage advisor within the room. There are others, and I feel that in the time I've known you, a specialism of yours that I'm aware of is later life lending and more complex cases. The sort of case that you might walk into the Halifax and they go, oh no, you're not fitting our 10 out of 10 score. Yeah. We don't want you. We look a bit into that.
We have quite a lot of cases introduced to us that don't fit the standard. Now, sometimes they will go with a high street lender, but it's got to be the right one for that situation. But we do get a number of cases that won't go to a high street lender. When I say high street, I mean not on this high street. I don't mean they're not on any high street. A lot of the lenders we deal with are smaller regional building societies who, to compete with the big boys like Halifax, Santander, to compete with them, they can't do that with rates a lot of the time. They do it with what they will do. They'll be quite niche with what they will do. So the high street isn't always very good at Airbnb mortgages, but some of those lenders are fine with it.
Companies out there that choose to make that their niche.
They do, and they bring in a whole load of things. And a lot of these small regional lenders are people that most people locally haven't heard of. And as well as them, the specialist lenders that are not on any high street that we deal with in some instances, and they can be interesting. We've had some cases recently, for instance, one lender said, yes, we'll take a view on 6 months self-employment. Now, that's never
unheard of, isn't it? Yeah.
But there was a particular situation, she'd gone from employed to being self-employed in the same role, really. But even so, they said, okay, we can take a view. Tell us a story. We can take a view. And they just moved into a property in Hailsham, which is nice.
So where do you gain all this experience? I'm assuming you've done it for a long time, but to have that knowledge of where to place and who to place, is that just through time? or
Yes.
do you invest in a lot of training, or what?
Well, there's quite a lot of training goes on with what we do. We get very regular online meetings, if you like, webinars,
Yeah.
with lenders and others to make sure we're up to date with some of the stuff that can be done. But a lot of it is time. A lot of it is having done it for a long time. I started in financial services in 1988, and I worked for what's called an industrial branch company, IB company.
Okay.
And people say, I'm not really sure what that is, but they remember the man from the Prue. The man from the Prue with his little book coming along and collecting the premiums at the door. That was IB.
Yeah.
And I started one of those sort of companies. So it's changed, the industry has changed a lot since then. And I've been doing solely mortgages probably since about 2000. Yeah, since about 2000.
And of course, I dare say in that sort of time, 25 years, there can't be many types of cases you wouldn't have encountered before on that journey.
I'd like to think so. We've covered a real variety of stuff, all sorts of, and still things come up that you think, oh, I've not had that one before. I've got one at the moment, which it's a little bit challenging because there's a commercial element to this residential property, but it's not your ordinary commercial element, i.e., a garden office.
Yeah.
Or a little annex where they do a bit of Airbnb. It's a bit different to that. And I thought when that came in, I thought, oh, okay, let's see what we can do. So we've done a lot of different work with adverse credit situations over time, especially because at one time I took 2 years out and went to work for a debt solutions company. Got a lot of...
Well, that must have opened your eyes.
It certainly did open my eyes. And I didn't realise what a steep learning curve there was going to be. But to find out about how a lot of that works and to meet some of the people I met in that industry, and I'm still in touch with some of them now, and they've been very interesting, very useful in sending cases to me, clients to me, who do have difficult credit situations. We've dealt with insolvency bankrupts and stuff in the past. And I think for a lot of brokers, they're very unsure about dealing with stuff like that, whereas...
Is that because it can be perhaps more time consuming,
It is
maybe?
more time consuming. Really time consuming if you get it... Well, some of those clients have got poor credit because they're not good at managing stuff. That also probably means they're not very good at producing documentation for me when I ask for it. So there's quite a lot of chasing involved.
Yeah.
But also if you're dealing with some situations where something has to get repaid on completion, and the most extreme example of that is bankruptcy annulments, which I still have to do a bit of education with lenders actually about what a bankruptcy annulment is.
Not a phrase I've heard before.
No. It's we can talk about that later.
Yeah.
But it's not just a discharge. So yes, that gave me access to a whole bunch of people who sometimes send me cases of that nature. I've spent a long time building up my connections professionally. So nearly all of our work is introduced from different places, but we keep going with that.
Through avenues
we want
such as
more
Hailsham
connections,
Chambers.
such as
Yeah,
Hailsham Chambers has been fantastic for that, meeting a lot of new people at Hailsham Chamber. So yeah, it's been good. It's been good, but I've worked hard over time, as has Leslie, to build up those connections so that we've got a number of people who send us work. But we also know that it's no good just depending on that. We need to get our name out there a lot more now. We're only, say, 18 months old. Now we need to let the world know that New
We've
Era
arrived.
Mortgages is here and is the Spawn, Polgate and Hailsham mortgage advisor.
So that leads me very easily into the next question. Why would I use you, Richard?
I think that's going to come down to, why would people use me? A lot of the time it's because they've been introduced. And if their accountant says, this is the guy you want to speak to, then that holds a lot of weight.
Of course it
And
does.
then there's going to be the initial contact and the engagement. And it's very much, I think it's a lot about personality. I think they need to, it's the
Gel
old,
with
it's the
you as
old
a
adage,
person.
know, like and trust, isn't it? They want to feel comfortable with me, So ideally, they want to like me. You don't have to like someone who's advising you, but it helps a little bit, and they need to trust me. And if I can get to that point in the initial conversation, then people want to use me. And then they maybe understand that I have a lot of experience, that we will look after them, as opposed to we don't just turn the mortgages over as quickly as we can and
No,
then it's gone.
And I'm assuming you're a whole of market
Yeah.
advisor. Yeah, yeah.
So yeah, we're a whole of market, and because we've got access to the whole of the market, and although we have, to a degree, it's ideal if we work with the lenders, and it's a very big range of lenders that we automatically have access to. But if I really want to use another lender for a particularly good reason, I can do that. And that's important sometimes because you need niche lenders for some special
Well, yeah,
cases.
because I understand through a estate agency that not all mortgage advisors are whole of market.
No.
Which means they're not really able to give you, in my opinion, not fact, the very best advice. Whereas someone like yourself, who does have access to the whole of the market, you might find a deal out there for me that what would you call it, a tied broker?
Yes,
Wouldn't.
a restricted panel broker, yes.
Yeah.
And I think there was a television program recently that was one of the issues that was brought up on that, I think. So yes, and it is important because sometimes we will find somebody who you may not have heard of. And because you may not have heard of them, you might say, I've not heard of them. Are they all right? Yeah, and they're absolutely they're right. They're a pucker building society. They're just not a big building society.
Because you've not seen them in your own town,
Yeah,
as it
they're
were.
they're on
I
two
suppose.
high streets in the north
Yeah.
of England, but they're a proper building society, things like that. So that's one of the reasons people I think, will come to me, because the introducers who send them to me tend to tell them that they will get looked after. So I've already been
Pre-sold.
pre-sold a little bit, yeah.
Yeah.
Because and the only reason introducers keep doing it is because I have looked after properly the people they've already sent to me, and they've got good feedback from those people who are very happy with what's happened. And it doesn't finish once the mortgage is offered, because it still isn't done till it's completed, and it doesn't finish when it's completed. We keep in touch with people ongoing. We make sure they understand that at any time going forward they can get in touch with us, ask us questions.
Do you offer additional services such as life insurance?
Absolutely.
What other products would there be?
Well, the main things that are going to go alongside doing mortgage work and mortgage business is going to be protection, personal protection business, shall we say, which is life insurance, critical illness insurance, income protection, which has been so undersold and it's so important. The percentage of self-employed people that don't have any personal sick pay arrangement is scary. So yes, we offer that, and we also direct people towards legal services solicitors when they need them. Sometimes they need other types of solicitors too. And we would also encourage them very strongly to get their will and their lasting power of attorney sorted out. We don't do that ourselves. We could have a package to do that. We don't want to. We do what we do.
You
But we
specialise
point
in what
people
you're doing.
towards other professionals who specialise in doing that. So, and also the house insurance, of course, that's important as well.
So something else I know you have a very keen knowledge in is later life lending.
Yes, we like that.
And I dare say the majority of people watching this, I could be completely wrong, don't really understand exactly how later life lending works. And as someone that understands it very well,
Yes. One of the
maybe you'd
things
like
with
to-
later life lending, when you talk about it, there is a perception or an assumption with a lot of people that I'm talking about equity release. And that's not always the case. Equity release is only one part of later life lending. So later life lending really is a very broad range of situations. For instance, I've just recently done a buy-to-let mortgage for an 83-year-old for his limited company. So is that later life lending? I think it is. I've done bridging finance for people that was ultimately paid off by selling another property, except for the last bit, and that was dealt with a lifetime mortgage, which you think of as equity release. So that took out the last bit of the bridge. So that was later life lending. I've recently completed a mortgage for a 79-year-old lady who wanted to buy a property with her son, but we're only using her income. She's got really good pension income, so she doesn't need equity release or a lifetime mortgage. We got her a straightforward interest-only mortgage, a 20-year interest-only mortgage.
I have heard that a few times, that
But the high street, the main high street lenders, this
won't
is not
touch
their
it.
stuff.
Yeah, they'll only cover you or lend you up until retirement age. But I'm hearing more and more now that there are the options out there that you can continue paying off the interest, so you're not suffering the compound
Yeah.
interest.
What's quite sad is that a lot of high street lenders, particularly people who've had interest-only mortgages and are coming to the end of their interest-only mortgage, and they have the ability to pay, they've been paying it, they will continue to have the ability to pay. So they go to their lender and say, look, can we extend this? Can we keep this going? The lender says, sorry, no. So that's
That's their criteria, and should you not fall into their criteria,
Yeah.
there's the door.
Absolutely. So that's a good time for them to come and talk to me, so I can show them somebody who's going to say, yes, we're quite happy with that situation. So things like that. So later life lending is a lot of things. Includes what are called retirement interest-only mortgages, RIOs, which are interest-only mortgages that go on until you leave the property, pass away, or go into care. But it's an interest-only mortgage. If you can afford the interest payments, then fine. You carry on paying it.
Would I be right in saying a lot of the bad PR around equity release mortgages has been this compound interest issue?
A lot of the bad PR, a lot of it is historic, I would say. A lot of it goes back to the bad old days when it wasn't regulated, when there were products out there that weren't great products, and some of them were, in the end, it appeared they were quite awful products. So a lot of it is like that, and people who will say, well, I know so-and-so who did this, and
they borrowed 50 and it ended up being
yeah.
500,000 by the time they died or something.
Things like that. And the reality of equity release, a lifetime mortgage, which is most of what we do. There are other types of equity, but there's another type of equity release, which is not really popular now, which is called a reversion, a property reversion. But with a lifetime mortgage, what's happening is you're borrowing the money and you don't have to make payments on it. So the interest that accrues, and it's added to it over the years, and it gets more and more over the years potentially, and then you get its compounding effect can make it quite a substantial amount. Well, the point to remember is you only take out of the property as much as you need to. Yes, it's going to do that, but what are you gaining by doing this? Is there a gain somewhere else, and you're prepared to accept that it will roll up? You also have the opportunity now of making payments into a lifetime mortgage, voluntary payments into a lifetime mortgage. So you can make payments in, which stops it going up so fast, and that's really helpful. And that makes a big difference when people are able to do that. They might not be able to afford an interest-only mortgage, but they might be able to afford so much a month they're prepared to pay. But because it's a voluntary payment, they do it as long as they want to.
And I think you've hit the nail on the head there. If it allows them to do what they need to do, that could be a whole variety of reasons.
For some people who are not very well off at all, but they've got an asset, it enables them to heat the house properly and eat properly. There are people like that who just need a little bit to supplement their income.
And for whatever reason, don't want to move.
Absolutely.
Yeah.
You can always talk to people and say, well, one of the options you've got is to downsize. And if they say, no, I really don't want to, I want to stay here until I go.
And that's what's then important to them, isn't it?
That
Rather
home,
than what's
that
left
home
in the
is
pot at the
important
end.
to them,
Yeah.
So, and then you're dealing with the family as well. We always talk to the family, particularly with lifetime mortgages, equity release. So the family knows what's going on. And then we always discuss what's going to happen with the mortgage. We discuss the fact that the interest will roll up over time and the effect that will have on the equity in the property and a potential inheritance.
I think you have to be unbelievably transparent on anything like that.
We
now,
really
don't
do.
you? Yeah.
It's very much about providing having the discussion and saying, well, there's this range of things that might be possible. And then we talk about the things that actually are possible, because some of them aren't. And then we go through those things and we say, of these things, I would advise that this is the better way to go. And these are the reasons I would advise this is the better way to go.
Do you think that a lot of people now are in a situation where their children are probably better off than they are?
Sometimes.
And the big importance of I must keep every penny to pass down to my family is lessening?
I think a lot of people feel that less, although it's possible to do that because you can secure part of the equity in your property that won't be touched by a lifetime mortgage.
Okay.
So for instance, if the property is valued at 200,000, you can decide you want to secure 30,000 of that for your estate.
Yeah.
So the lending will only be based on a value of 170,000, and that
Okay.
30 is just
Yeah, yeah.
locked away for the future.
So you're still leaving
So
something.
even if it goes right up to the limit, which it really does, then there's still 30,000 there. Proximity to commercial is something I would really like to see them be more flexible. I've had that happen with properties that were, you could see a farm across this field over on the next bit, and you could see a farm, and they said no. So things like that. It is. The other thing is very challenging, and this might apply to some properties you deal with, is agricultural restrictions.
Yeah.
Mortgages on those properties can be challenging anyway. Lifetime mortgages at the moment is still non-existent.
Really?
I've complained, I'll whinge about everything I can't do. I speak to lenders and say, well, why can't I do it? When are you going to change it? And I do that on a fairly regular basis.
Yeah.
I think it's only when there's pressure and they think there's enough interest in it that lenders will then say, actually, perhaps we should.
I dare say there's a cost and a risk involved for them launching
There
it, so
is.
they want to know that it's going to be worth their time in getting that product off
Absolutely.
the ground.
And all the time they're getting enough work coming in, enough new borrowing coming in.
Do they need
and
it?
they don't need
Yeah,
to.
yeah.
They won't. Until one person does it, until one lender does it, and they see a lot of work going to that lender. And then suddenly
we've
they
missed a
think, well,
trick.
maybe we'll have a look at that.
Yeah.
And that's happened with a number of things.
So, during your career, there must have been some real high moments and some low moments.
Yes.
Have you got any particular highs or lows you'd like to share with us?
Oh. There's probably quite a few highs, because every time we get a result or a solution for someone, especially someone who didn't expect to get a positive solution, it's really, really good. It's really rewarding. It's great to have people come and say, Richard, thank you so much. I didn't think this was going to be possible. And I've had a few
what
of
they
those.
feel is the impossible
And I've
happen.
had a few of those over time where there's been a challenging case, whether because of the property, maybe because of the slightly challenging income, challenging credit history, lack of deposit, whatever. So yeah, and especially I think some of the divorce cases I've dealt with, it's really nice to get somebody resettled in their new home, because everything's so up in the air for them until they get there. And it's really nice to get cases like that. I've had, probably over the years, I've had one or two cases that in the end, we just couldn't place. Or I've had people that have just said, have walked away because they decided it wasn't the right thing for them. And that's not really in the later life market. I still talk to people who think that because I'm dealing with later life lending, I'm only talking about equity release. So I had to be very clear at the outset. We're not just talking about equity release. That's one tool, and only one tool, but a very useful tool. So yes, I've had a few cases where they've been challenging clients, and we've almost got there, and then the lender said, actually, no, I don't think this is going to fit because we need this as well. So without being specific, and I don't want to be too specific about particular cases, but yeah, we've had a lot of highlights.
But so, to go with highlights, I mean, most people have had lowlights of their career. There must have been some particularly difficult times, I think most of us in business are doing that
Yeah.
a lot of the time. Is there anything in particular that stands out to you as a
low light. It's
or a
really
particularly challenging time, maybe?
a challenging time was COVID. I won't make no bones about it. That was a really challenging time because there was no property moving in COVID, and either remortgaging or refinancing or even equity release, you still needed a valuer to go into the property, which knocked that sideways. With equity release, a lot of the time you had a visiting person going to get papers signed. That got really difficult. I can remember somebody going that they were doing it at the window, confirming
Yeah,
stuff,
yeah.
looking through somebody's window to talk to them. That was difficult. And going even further back, 2008, 2008, with the financial debacle that happened, mortgage work got so difficult for at least a year then. It really did get difficult. You sort of wondered why you were even in the mortgage business. I think some brokers came out of the market completely at that point. I got by the skin of my teeth, but I got by, and then it started all happening again. It started moving again, which was great. But the financial crash, crikey! I mean, honestly, you couldn't remortgage a lot of people because they were on such a good rate they got before. They were on something like bank base rate minus a quarter of a percent. I mean, how can you? There's no reason to remortgage. You know, you buy to lets, the loan to value, the maximum loan to value on buy to lets dropped right down. So you weren't doing really much buy to let business. The
Lenders were scared, weren't
yeah,
they? Yeah.
the purchase market pretty much died. First time buyers pretty much died. It was just a good time probably for people who were cash rich and had opportunities to buy. But it all came back. It did come back. We got through it, and it came back. And lessons were learned, I think,
I think
by lenders and banks and the
Yes.
regulatory authorities.
Because look what it done to house prices in such a short space of time.
Yeah.
They were just doubling.
Yeah, yeah.
I don't think we'll ever see that kind of growth
No,
or irresponsible lending again.
I don't think we will. I don't think we'll see interest rates
No.
that low again. Not in my lifetime, I don't
No.
think.
I mean,
But so-
I hear stories of people that bought in 2002 and sold in 2004 for twice of what they paid for it in 2002.
yeah,
I mean, it was never going to be sustainable, was it?
no, not really. I don't think so.
No.
And it wasn't great for the market generally. It's great for somebody who can do that, but what does that do for the first-time buyer market? First-time buyer market.
Can't keep up.
It's not great for them at all.
I really hope that everyone's enjoyed listening to and learning a bit more about Richard from New Era Mortgages, what he offers and how he's gained that experience and how he could potentially help you. Please do like, share, subscribe to our next upcoming podcasts. And thank you very much for tuning in. Thank you very much, Richard.
Well, thank you, Sam. I've enjoyed it.
Cheers.